In an interview with Business Insider, hedge fund manager Michael Burry, who is renowned for having forecast the 2008 housing market catastrophe, warns of a future financial disaster that would be considerably worse. Burry said that the upcoming crash will be worse than the one in 2008 and alter an entire generation. It pours when it rains. Literally, it says that a good or bad scenario always leads to another good or bad situation. There has been an economic slowdown, notably coming from the stock market, since the beginning of 2022. In this video, I'll go through what made Michael Burry so certain that a financial crisis was coming in the past. What makes him think that a bigger one is coming that would impact a whole generation, and how you can help protect yourself and your family from taking any risks that may cost you all. Every one of us is aware of the 2008 financial crisis, commonly known as the Great Recession. The event served as a wake-up call that nothing is ever as it seems and that we should always be prepared for the worst. A financial crisis can be a terrible moment for normal people, but it can also be a terrific time for professional investors, according to a comment from American investor Robert Kiyosaki. On the plus side, this assertion appears to be accurate. A contemporary example is the COVID-19 pandemic, in which some people benefited significantly while many others suffered greatly. A typical example in this perspective is Elon Musk, who eventually surpassed Amazon billionaire Jeff Bezos to become the richest person on Earth. Burry, who was born in 1972, started off as a pathology and then neurology resident at Stanford Hospital. He later switched to managing hedge funds and started concentrating on making investments in troubled businesses that had a lot of potential or value growth. Burry was making investments in troubled businesses that had a lot of potential or value growth. Burry was present when the dot-com bubble broke in 2000 and the 9/11 attacks had a direct impact on the economy of the United States, which was already experiencing a moderate recession. Burry recently asserted that the stock market, cryptocurrency market, and other asset markets are due to undergo an enormous meltdown. But the question is when exactly this will occur. Burry has made assertions of this magnitude before. He has previously forecast a similar scenario which ultimately materialized, but I'm confident that neither you nor I would want that happen now. As we are all aware of the potential repercussions in the year 2000, Burry shut down his website where he regularly offered investing advice. He then founded his own hedge fund, Cyan Capital, and within 4 years, he was already overseeing a staggering $600 million. It got to the point where he had to turn down money from new clients in order to concentrate more on the investment agreements he had with his existing clients. Burry has always been passionate about starting his own investment firm, and he put a lot of effort into his studies to get there. The majority of his studies were what enabled him to choose wisely among his investments, and drew more people to join him. Burry constantly changed his investment approach because of his high level of investment intelligence, which allowed him to foresee danger. Burry decided to short the market anytime such a thing was about to occur, after determining that subprime mortgages and associated bonds were likely to lose value. Although it wasn't their fault because they lacked his insight, some of his clients were unhappy with his choice and withdrew their capital. Nevertheless, in the long run, Burry and the investors who put their faith in him benefited greatly from his prediction. This illustrates how, at some points in life, being willing to take chances that other people don't support can truly change your course. Due to his predictions, Burry is now a well-known figure on a global scale. He has a large following on social media, and they are eager to see his updates. Michael Burry is a fantastic illustration of the value of investigation and due diligence. Before making his disastrous purchase, he studied the subprime mortgage market for months, poring over data. This thorough preparation and analysis ultimately paid off handsomely. Burry recently deleted a tweet from September about the cryptocurrency market, meme market, and back crashing. But you can also build on this and re-examine your decisions to avoid suffering any kind of loss. If one of them worsens, you might believe that the economy isn't changing enough to bring on a deeper recession. but given the range of possibilities, you might be mistaken. You must exercise prudence in light of the S&P 500 index's sharp decline. Investing in businesses that will likely be less impacted by a market collapse is one approach to keep safe. Investing in a number of different asset types, such as bonds, real estate, and cash, is another strategy to keep yourself safe. You may reduce risk and shield your portfolio from losses by diversifying. Many individuals believe that the 2008 stock market crash was the end of a mistake, but as we all now realize, that was far from the reality.
Let me know in the comments if you have any other questions about investing. Let's return to the video.
The market has more remarkable booms and busts in store for us in the future, making the Great Recession a mere blip on the radar. The price of Bitcoin has fallen by 66% from its peak in November 2021, when it was $65,000, to as low as $9,000 as of October 2022, making Burry's prediction of a worsening fall seem very likely. The onus is now on you to exercise extreme caution while making any investments. So keep diversified and avoid putting all your eggs in one basket. He made a point of highlighting several elements, such as high debt levels, inflated asset prices, and investor complacency, that he believes are laying the groundwork for another major market correction. He cautioned that the next crash may occur sooner than anyone anticipates and advised people to begin preparing for it. Burry compared the current economic collapse to an overcrowded theater with only a small exit, and as investors rushed to leave the market, they either crushed on others or got trampled on. Burry compared the current situation we are in to the December 2007 levels, and from his analysis, we are sure to be in a mess. Other nations are employing a variety of strategies to try and slow the dollar's appreciation against their own currencies. Some of these strategies include intervening on the foreign exchange market to buy dollars with their own money and sell dollars for other currencies, while others involve allowing their currencies to float more freely. In order to make their currencies more appealing to investors, some nations are also increasing interest rates. The last time the value of the pound fell to a record low versus the US dollar occurred on February 26, 1985, when it was 1.1407 USD. One of the experts who has supported Burry's assertion regarding the impending Great Disaster is Greg Jensen, chief investor of Bridgewater Associates. Jensen asserts that it is essentially impossible for prices to return to what they were before to the COVID-19 pandemic. Burry maintains that despite the current decline and significant fall, we have not yet reached the bottom. If this is the case, then we will inevitably have another crash that is worse than the one that has already occurred. A perfect storm of circumstances, including the recovery from COVID-19's high inflation rates, the Terra Luna crash, the Russian-Ukraine war, and supply chain concerns, led to the cryptocurrency crash, which saw a sharp decline in price starting in May. All of these factors reduced the demand for cryptocurrencies, which in turn caused prices to drop. The crash was made worse by the fact that many people had made significant investments in cryptocurrencies in the hope of making a quick profit. However, when prices started to fall, they started to sell off their holdings, which further lowered prices. What does this market fall actually mean? Given everything that has been said, a market crash is characterized by a rapid, steep decrease in asset prices. It is frequently accompanied by a period of panic selling and can have a significant negative impact on the economy. Even while a market crash can happen in any asset market, it is most frequently linked to the stock market. A market crash is often started by a jarring incident that makes investors lose faith in the market's future prospects. This can prompt a quick and dramatic sell-off of assets as people try to get their money out before prices fall even further. Market collapses can have a knock-on effect on the economy because they can erode investor confidence in the financial system, reduce consumer and company spending, result in the closure of enterprises, and result in job losses. However, when a bubble pops, the value of the asset usually falls precipitously, often resulting in generalized economic chaos. Due to the fact that they frequently have substantial sums of money invested in the asset that has lost value, investors are typically the ones that suffer the most when a financial bubble bursts. However, non-investors may also be impacted because the economic downturn that comes after the financial bubble burst may cause job losses, wage reductions, and a decline in consumer spending. This remark shouldn't make you think too hard because The Big Short movie ends with the perplexing line that Michael Burry is only focused on one commodity, which is water. It's only an eye-opener to inform you about Michael Burry's activities and how you might adapt his trading strategies to fit your own. Even though commodities like oil and gold have been traded on the futures market, you might wonder how it is possible to invest in water. However, you shouldn't be shocked by this since water has only recently begun trading on the market. You risk becoming one of the numerous people who were unaware of the new development if you don't respond swiftly as well. We can appreciate water's value when the well is dry, according to American founding father Benjamin Franklin. Given that Burry has a track record of accurately predicting major market moves and that his predictions about the housing market disaster were accurate, as well as his current warning that the next crash would be far greater, it is important to heed his warnings. Investors need to be ready for the financial crisis that is currently occurring.
Hope you have learned something from this video. What are your thoughts? Comment down below. If you enjoyed this video, make sure to click the like button and also don't forget to subscribe to the channel and hit the notification bell for you to be updated on our latest videos. See you in the next video. Thanks for watching. Want to learn more and be more financially literate? Click on the next videos we have in our channel, showing on the screen right now.